SK Hynix just announced a massive share buyback, the size 28.6 billion US dollars. But why is SK Hynix buying back so much stock, and what does it tell us about the AI semiconductor market? Let's break it down. On August 19, SK Hynix board approved the plan. The company will repurchase and cancel about 24.07 million shares. The total value is around 40 trillion Korean won. That's about 28.6 billion US dollars. The buyback runs from August 20 through November 19, 2026. But there's an important detail here. SK Hynix won't just hold these shares, it plans to cancel them. That reduces the number of shares outstanding. And if earnings stay the same, fewer shares can increase earnings per share. But that does not guarantee a higher stock price. So, why is SK Hynix doing this? The first reason is cash generation. SK Hynix is one of the world's largest memory chip companies. It's also a major supplier of high bandwidth memory or HBM. HBM is a critical component in AI computing systems, and demand has been extremely strong. Look at the latest numbers. In the second quarter of 2026, SK Hynix generated 79.3 trillion won in revenue. That's up 257% year over year. Operating profit reached about 60.5 trillion won. That's up 557% year over year. Net profit reached 93.92 trillion won. That's more than 13 times the level from a year earlier. However, there's an important detail. A large part of that net profit came from investment asset gains. So, operating profit is the cleaner number to watch when looking at the core chip business. And SK Hynix is continuing to invest in AI-related memory demand. The company has started mass shipments of HBM4. It expects production to ramp further during the second half of 2026. It has also secured long-term agreements with around 10 customers. So, the company is investing for the next stage of AI demand. But it's also returning cash to shareholders. That's where this buyback becomes important. SK Hynix has changed its shareholder return policy. For 2025 through 2027, the company now plans to return more than 50% of cumulative free cash flow to shareholders. That can include dividends, share repurchases, and share cancellations. So, this $28.6 billion buyback isn't just a one-off announcement. It's part of a broader shareholder return strategy. But there is another interesting part. The timing. On August 19, SK Hynix shares fell nearly 10%. The decline came amid broader concerns about semiconductor valuations. There were also questions about how sustainable massive AI spending can be. The buyback was announced on the same day. That timing is worth watching. But we shouldn't assume the company is trying to guarantee a particular stock price. SK Hynix has described the move around shareholder returns. SK Hynix also said it believes its current share price does not fully reflect the company's value and cash generation ability. The buyback itself represents about 3.3% of the company's outstanding shares. So, this is large enough to be meaningful, but it doesn't change the underlying business by itself. Now comes the bigger question. What should investors watch next? First, HBM demand. Second, AI infrastructure spending. Third, memory pricing and supply. And fourth, SK Hynix future free cash flow. Because that will determine how much cash the company can continue returning. SK Hynix has indicated that more shareholder return details could come with its third quarter results. So, the real story isn't simply a $28.6 billion buyback. The bigger story is this. SK Hynix is generating enormous cash from the AI memory cycle. At the same time, it's investing for future AI demand, and it's returning a significant portion of its cash to shareholders. The key question now is whether that balance can continue. That will depend heavily on the next phase of the AI semiconductor cycle. And that's what we will continue tracking. If you found this breakdown useful, like the video and share it with someone interested in AI and semiconductor stocks. And subscribe to the channel for more simple data-driven stock market explainers. This video is for educational and informational purposes only. It is not investment, financial, or trading advice. Always do your own research before making investment decisions. Thank you. Thanks for watching.